Well, good morning, traders. Congratulations to all the Bitcoin bears and all those who went short. Big profit was to be had last night as Bitcoin crashed to new lows. And anybody who went long, I sure hope you had in tight stops, all right? This is not the place to be trading if you're new. This is really not the place to be trading even if you're experienced. I personally am in mostly cash in my trading portfolio. In my long-term portfolio, I have holdings that earn me up to 35% interest, and those I just don't even look at. I just let it ride and go right through, all right? But trading in this territory is definitely difficult. Let's take a look this morning at our weekly charts, and because we'll gain a little bit different perspective in doing so. And to get started, we'll start right with the VIX, which I've said all along is our predominant indicator. All right, this dominates everything, guys. The VIX chart, the fear index. And I think last week I told you we are headed up to that 37.85 resistance again. Whether we get there remains to be seen, but take a look at this jump in fear. All right, all the way from where we closed on Friday up here. That is a massive increase in fear. This is all due to that bad CPI, inflation data, etc., etc. The market is aggressively pricing in the Fed's next move, really. All right, so we're expecting more clampdown on this inflation as it seems to be getting out of control. But is it a short-term reflection? Is it is the inflation lagging due to the changes in the global economy that we have not seen before because of a pandemic? Will it tame down? I don't know, guys. I don't know the answer to that. What I suspect here is that the Fed's hawkish reaction, hawkish language, and hawkish behavior towards inflation is helping the market to aggressively price that in. And that is why we are seeing such a decline on the markets. But if we're looking on the weekly here, which we're doing, this is a bull flag. We broke to the upside of that, and we are headed up even further, which means, and be careful here, guys, especially bulls. Be careful here. This being our predominant indicator would tell us that the market has further to decline before we reach our absolute bottom, before we capitulate. All right. So I'm starting with the VIX, and I'll probably end with the VIX because this is all fear regarding current situation, which is here in the U.S. has to do with inflation, and globally, really. Inflation has run amok in many different nation-state players of this economy. All right, here we have the dollar index. All right, and now I'm going to zoom in quickly here on the daily because I want to show you something. All right, previously I was expecting us to come back down and touch the top of our bull flag. That does not seem like it's going to happen anymore. In fact, I have changed my view due to current price action. And I know that is easy to do after the fact, but sometimes we get it wrong. But what I'm seeing here is this descending wedge, which I said in a previous video is the predominant indicator as of late. All right, so this is a bullish descending wedge. This right here, I can draw it out as a triangle. Anyways, I just wanted to show this to you because right now our dollar has and is broken to the upside of that and is attempting to go further up to this weekly. Actually, I shouldn't even call it weekly, just I'm zooming out to the weekly here. I'm going to show you the last time we touched this. I believe I've covered this a couple times before. 2001, guys, so 21 years, over 21 years ago. All right, and that looks to be where the dollar is headed. The market is very aggressively pricing in what it thinks the Fed's actions will be in the next FOMC, and even the one, market prices that in months, if not years down in advance. Will that happen? It remains to be seen. As you guys know, I'm under the impression the market may, the Fed may do one more 50 basis point rate hike. It will observe how that affects the market. It will observe CPI data, inflationary data, which is, I know Janet Yellen took back her statement that inflation is transient. And then she admitted she was wrong in stating that it was transient. To some degree, she was actually right that inflation is transient, in my opinion. It just wasn't as transient as she originally intended. And in that regard, she was wrong. So what I'm saying is that eventually this inflation, I believe, will taper down. Not only just because of the Fed's actions, but I do believe that because of current technologies that exist in our macroeconomic climate, those technologies will help. If you listen to anything Kathy Wood says, and I know, she's Wall Street Bets likes to mock her, but I do believe she has some good research in that regards regarding technology and how it has a deflationary impact at the macroeconomic level. All right. And so that being said, the Fed, in my view, may do one more 50 basis points hike, may do two, but at some point it's going to say, and sometime this summer, Jay Powell, I believe, is going to come out and put a pause on the rate hikes to observe the economic conditions here in the U.S. to see how that CPI data, inflation data, is impacted by his rate hikes. And not to mention that it seems the Biden administration is encouraging him to become a little bit more dovish. I don't know why. It's politics involved. I don't know. I don't know any of that stuff. All right. Indexes here on the weekly. Now, guys, what could be happening is we could be forming a double bottom. All right. I want to show you something here on the weekly. All right. It's big support up here, coming back down. Are we going to touch this support again and then head up, or are we going to continue down? At this point, really, it's anybody's guess, but it could be a double bottom here at 140 on the NDAQ index. All right, S&P looking kind of the same way. All right, we have our descent. Didn't quite reach the support that I had drawn there. Let me see where I drew that. And oh, I see there is another level right here, which it looks like we touched. Okay, and again, came back up. That's a bull flag that failed. All right, and sometimes those things do happen. All right, came way back down very fast, and now are encroaching upon that previous support again. Will we make a U-turn and go back up? Will we continue back down? I want you to tell me what you think. I'm curious as to what my subscribers think in the comments. Are you guys uber bearish? Are you thinking we head further down into a state of darkness, into the black hole, the black abyss? I want to know what you think in the comments here. Redraw that support. All right. DJI, Dow Jones Industrial. I'm deleting all these bull flags. They failed me. All right, hit support again. That looks like a very strong support, so I'm going to thicken that line. And you know, W patterns on all of these indexes, right guys? All right, so it could be double bottom here, or maybe that W pattern fails and we continue further down. Please let me know in the comments what you all think. I'm very curious of what the greatest denominator of bias actually is in this market. And so sometimes I like to assess what my subscribers say as well to get that. All right, so I have two head and shoulders patterns here. You can see the smaller one here, which I drew on the daily, has been reached. All right, that was this first black target down. On the weekly here, I have this larger head and shoulders pattern. All right, see that? And the target down here is an unbelievable 360 billion market cap. All right, down from up here at 3 trillion. We go from 3 trillion to 400 billion. That's, guys, it really seems it's very hard for me to believe, but I have been saying that all along. And every time these bears just surprise me. So I can't continue to say that. If the market cap gets down there, though, look for 50% of alts just to be wiped out. I mean, there's no question. Bitcoin will remain strong, remain dominant. It's not going anywhere. But a lot of these shit coins, meme coins, will go away if they haven't already. All right, on the weekly, I want to show you something. Let me jump. Actually, this is just the total chart. That's fine. I'll leave it here. That's not what I wanted to do. Can I take this chart up a little bit? All right, so something I haven't checked out here is the weekly. We have touched the weekly before on the total market cap. Actually, we have rode right along top of it for many moons. And then here we touched it again. We have never gone below the 200-week moving average. So that's something to keep an eye on, as well as we're approaching that 200-week moving average, and yet our target down for this other bigger head and shoulders pattern is way down there. So that would be history in the making if we break that 200-week moving average. Definitely something to keep your eyes on. Ethereum. All right. Big old, I want to show something here on the weekly. All right, I'm spotting it right away. Ignore all the noise. Try to follow the lines here. I'm sorry, I got a lot of noise here. I'm going to draw a neckline of sorts here, right? What time do we have? 13 minutes. Okay, do you see what I'm getting at here, guys? Another head and shoulders pattern. Doesn't have to be exact. What you see is the left shoulder there, the head right there, the right shoulder right here. So what is our target down on this thing? All right, we're going to go from, I'm just going to go from the body high down to the neckline. All right, and then we take that as a measurement to where our target down would be. And that is unbelievable. $96, really? Really? You know, I don't know, guys. We have never broken below this 200-week moving average. Oh, I take that back. Ethereum has broken below. Ethereum is different. Ethereum has broken below the 200-week moving average. Okay, so we definitely could come below it again. Again, this is crazy price action that we are witnessing. You all get to experience this with me. Aren't you lucky? Aren't you so lucky? All right, let's take a look at Bitcoin here. All right, so my descending wedge, which I drew yesterday, was from the body lows. We broke below that. Let's see what, and this is still the weekly here. Let's see what happens when I zoom out to a cleaner chart. Let's redraw this from the, remember I said that some people were drawing from the wick downs. Oh, and let me start with the Fibonacci here first, okay? Because as long as it's up here. All right, so I have Fibonacci drawn from the wick high, our previous high, to where I suspect the market wants to go. Why am I doing that? I just wanted to see what would happen if I drew to 20,000, which is going to be a huge psychological barrier. All right. Look at these levels, guys. They line up perfectly with levels I have drawn on the chart. 0.23 is at 31,000. All right. 0.382 right here is definitely a level. All right. Right here is definitely a level, and that's 0.38. So all of these fib retracement levels line up approximately with good levels on the chart. So that is interesting. It could be a foretelling of where we're going to go. However, the other thing I wanted to visit on this chart is Bitcoin has never broken below this 200-week moving average. That would be history in the making as well. If we break below, well, we broke below, but we didn't confirm. All right, so we could break below and then come up quickly. All right, that would be capitulation in my opinion. Break below, come up quickly, never form another candle of confirmation under the 200 weekly, and that still has happened previously. The last time it happened was in March of 2020. Okay, 4 minutes, and I'm going to draw this descending wedge from the tip downs here. All right, so guys, remember I said some people were drawing from the tip downs. That's what I'm going to do right now very quickly with this descending wedge. All right, and I'm going to go all the way to 20,000 like so. Hit those tips. There we go. And you can see we still broke below that wedge on the weekly. Another thing I wanted to show you here, and let's delete that, is our Gartley pattern or cipher pattern. We're going to start down here when we had the first green candle, go up here, here, here. This is a very bullish pattern. But take a look at this, where we are right now. Actually, if we go to that 20,000 mark, actually where we are right now is 0.78. That distance, again, that's where it should go. All right, 2.5 minutes left. What else am I going to cover here? That is interesting, guys. Keep this pattern on your charts as well. Draw this out, and you know, we're getting very close is what it's showing me. I still think we are going to go and just capitulate to that 20,000 though at this point, because that psychologically is where the market wants to go. All right. What is this chart? CME futures, again, approaching the 200 weekly. Bitcoin dominance. All right, all the way up here. We have one more level to, for this chart, we have to zoom into the daily, see what we got going. All right, forming another bull flag. Keep making higher highs and higher lows. And that's just the pattern that has been taking place here, especially on the daily. Yep, another bull flag. All right, so again, looks like Bitcoin dominance wants to even go higher, up to this 48.92%. All right, that's all I wanted to cover here. Market has not opened yet, but again, predominant indicator is that VIX. That's where we're going to end up today, and I'm going to do our closing comments. Guys, the VIX remains the predominant market indicator, so watch that as the market aggressively prices in what it thinks the Fed is going to do. Is the market pricing in too much? Is it being too aggressive? Only time is going to tell that. But all eyes and ears should be on the Fed, because the market is going to react quickly to any whisper of policy change in the future. I mean, you're going to see that right off the bat before anything is done. If Jay Powell and company indicates in any way a smirk on his face, a twinkle in his eye, just whispers of anything different, the market is going to aggressively price that in. All right, so trade carefully down here if you are trading at all. I prefer to be in cash or stablecoin at this point. That's all I have for today. Good luck this week, guys. Peace.